Welcoming you all in my class. Myself, Dr. Soumya Ganguly from the Department of Commerce, Barakpur Rashtraguru Surendranath College. Today, I am here to present you one important topic which is known as redemption of preference share, and this topic is basically meant for the students of BCom Honours and General Semester 5, and this topic redemption of preference share will be in your corporate accounting paper under DAC 2. I have mentioned your paper code over the first slide. FACA DAC 02T for BCom Honours students and FACG DAC 02T for BCom General students. So, before going into the detail of the presentation or today's class, what we have learned in this section. Now, for this we need to know the learning objectives. After going through this class, you can able to understand the basic concept of redemption of preference share. Now, what does it actually mean by redemption of preference share? That will be discussed in today's class. Along with that, you will learn what are the regulatory provisions required for the purpose of redemption of preference share, which is as per the Companies Act 2013. You will also know the different methods of redemption of preference shares. Along with that, you will learn that why one important term, that is capital redemption reserve account, that is CRR account, why CRR account are being created for the purpose of redemption of preference share. And interestingly, you definitely will learn the accounting entries which are relevant for redemption of preference share, along with the accounting treatment. That means at the end of our class, we will solve one problem based on redemption of preference share as per the Companies Act 2013. So, these are our basic learning objectives. Now, as the content shows that redemption of preference share. Now, before going into detail, I must discuss few things about share. What is share? As you all know that share is a fraction of company's capital. Now, as you all know that company's capital are of two types: equity share, that is owned capital, and borrowed capital. Now, owned capital is basically known as share, and share are of two types: equity share and preference share. So, what is equity share? Equity share is the direct participation of company's capital. And what is preference share? Preference share is also the participation in the company's capital, but preference shares are given some preferences in addition to the equity shareholder. Now, what are the preferences? That they are given preference at the time of distribution of dividend, as well as they are given preference at the time of redemption of preference share, or redemption, that is returning of capital. Now, equity share can be of different types like ordinary equity share, sweat equity share, bonus share, equity share without voting right, and so on. Preference share are also different types like redeemable preference share, cumulative preference share, non-cumulative preference share, etc. So, these are the basic classification of equity share as well as preference share. Now, we are coming into the main topic, that is redemption of preference share. Now, what does it actually mean by redemption? Redemption is nothing but return of capital money to the shareholder. What actually happens that initially company collects share capital money from the shareholders, and after certain period of time the company needs to return the amount of capital to the shareholder. So, this returning concept of money to the shareholder is known as redemption. So, here it states that the term redemption of preference share refers to returning the money to the preference shareholders. one important thing is that either at a fixed date determined by the company or on the date of expiry of the validity of such preference share. Now, what does it actually mean by validity? According to the Companies Act 2013 section 55, it states that no preference shares can be issued as irredeemable. All the preference shares must be redeemed within 20 years from the date of issue. Now, let me give you one example. Suppose on today shares are being issued. So, within 20 years from today, the preference shares need to be redeemed. That is the validity of such preference share. Now, the validity may be lesser than 20 years, it depends on the company. Maximum it can be 20 years, but if the company thinks so, then in that case the company may redeem the preference share within 20 years. Now, this is the basic concept of redemption. Now, what are the provisions? In the learning objective, we states that we will know the provisions of the Companies Act and the provisions as per the section 55 of the Companies Act 2013, which are laid down for the purpose of redemption of preference share. Now, what are the basic provisions of the Companies Act? I will let you one by one. The first provision is that all the preference shares must be redeemed unless and until they are fully paid up. Partly paid up preference shares cannot be redeemed. It is most important part as per the provision of section 55 of the Companies Act. Only fully paid up preference shares can be redeemed. No partly paid up shares can be redeemed. Okay. So, this is the first provision as per the section 55 subsection 1, that the company will issue only redeemable share, no irredeemable shares can be issued, as I already told you, and it can be redeemed only when it is fully paid up. Unless and until it is fully paid up, it cannot be redeemed. Now, another important thing is that there are two methods for redemption of preference share. One is redemption out of profit, one is redemption out of fresh issue. Okay. As I already in learning objective, that we will learn the methods of redeeming preference share. Now, there are two methods. One, either you can redeem out of the profits, or you can redeem by issuing fresh equity shares or preference shares. Mind it, it is only shares. Issue of debenture, issue of other things cannot be permissible. Only issue of share will be permissible, either equity or preference, for the purpose of redemption of preference share. Another thing is that if the company redeem preference shares out of the profits, in that case the company needs to create one account, one reserve, that is capital redemption reserve account or CRR account. Now, what is the logic behind creation of this CRR account? What are the logics of these two methods? These are also some important aspects. So, you have to remember some provisions. Now, I will let you know one by one. These shares, these means preference shares, cannot be redeemed out of the proceeds of fresh issue of debenture or out of bank loan. The company can issue debenture, the company can raise bank loan. This is just for the liquidity purpose. Out of that proceeds, company cannot redeem preference share. This is most important part. So, either the company will issue fresh equity share, fresh preference share before the redemption, or the company can utilize its free reserve balance. Now, what does it actually mean by reserve? Free reserve can be used for this purpose. Capital reserve like share forfeiture account, development rebate reserve and other capital reserve cannot be used for the purpose of redemption of preference share. Only free reserve can be used for the purpose of redemption of preference share, and free reserve may be like statement of profit and loss account, and general reserve, and if any other reserve which are free. Now what does it actually mean by free? Free means free for distribution of dividend. If any share, any reserves are retained for the purpose of distribution of dividend, it will be known as free reserve. So this free reserve can only be used for the purpose of creating CRR account. Why it is so? Because as you can know that if preference shares are redeemed, then there is a chance of capital erosion, that capital of your business is going to the shareholder, that is there is an outflow of capital, but the company should protect its the interest of the creditors and outside liabilities. So for this purpose, either the company will issue fresh equity share so that the capital which is eroded can be restored, or the company will block its free reserve balance in CRR account. If the company transfer the funds from the free reserve to CRR, there is no such way to pay dividend from CRR. Capital redemption reserve account can only be utilized for the purpose of bonus issue. Only for the purpose of bonus issue CRR can be utilized. Okay. So this is the important part why CRR account is being created. It is basically CRR account is being created or new issue will be made. It is basically for the purpose of stopping capital erosion. Okay. So these things must be remembered before going into the sum. Now I am giving you the accounting entries. What accounting entries are basically done for the purpose of redemption of preference share. Now I will just give you the synopsis. First, the preference shareholders will be due for the purpose of redemption. Next, either fresh issue will be made, or out of, if it is out of profit, then profit will be transferred to CRR. It can be the mixture of these two, that is some, suppose total amount of preference shares to be redeemed is 1 lakh, face value of preference shares to be redeemed is 1 lakh. For this purpose, the company can issue entire amount by issuing fresh equity or preference share, that is 1 lakh can be collected by issue of equity or preference share. Say for example 40,000 can be issued by can be collected by issue of fresh equity or preference share, and rest 60,000 can be collected from the proceeds of from the reserve balance. Okay. So it can be the mixture, either out of fresh issue, entire amount out of fresh issue, entire amount out of free reserve, or a combination of free reserve and fresh issue. These two can be done. So what will be the journal entries? First, the journal will be due to the preference shareholder, fresh issue. Next is if it is out of profit, then making arrangement for transfer to CRR. It might be the combination of 2 and 3. Then if the preference shares are redeemed at premium, then you have to give entry for premium on redemption. Then premium on redemption will be adjusted against the free reserve balance and securities premium. And lastly, the preference shares will be paid off. And for the purpose of liquidity, if the company thinks so, it can collect fund from by taking loan or by issuing debenture. Okay. So these are the journals we will basically let you know. The first is when the shares, if the shares are partly paid up, in that case as the provision already I told you that no partly paid up shares can be redeemed, only fully paid up shares can be redeemed. So the first provision is, if it is a partly paid up share, you have to make it fully paid up. So for this purpose, first of all you have to make a final call on the preference shares which are partly paid up, and for this the journal will be preference share final call account debit to preference share capital account. Then you will receive the final call money, that is bank account debit to preference share final call account. If it is partly paid up, then amount to be due for the at the time of redemption to the preference shareholder. So, what will be the journal for amount due to preference shareholders? Now, it is very easy. Now, as you know that you are redeeming preference share capital. So, capital is capital shows credit balance in your books. So, as you are cancelling capital, definitely capital account will be debited. So, for this purpose redeemable preference share capital account will be debit. Now, at the time of redemption, if you are making payment of any premium, that amount will be known as premium on redemption account. Now, I am giving you one example, like suppose the value of preference share is 100 and you are redeeming that particular preference share at rupees 110. So, you are giving 10 rupees as premium. So, premium on redemption will be debited as you are making payment of that, and the entire amount, that is capital and premium, will be credited to preference shareholder account. Okay. Now, the first journal is preference share capital account debit. If it is redeemed at premium, premium on redemption account debit to preference shareholder account. Next, if you are redeeming preference share out of the fresh issue, you have to make a journal of that. Now, as you all know that fresh issue of shares, equity preference, can be of 3 types, at par, at discount and at premium. So, if it is at par, that is shares of rupees 100 issued at 100, then the journal will be bank account debit to equity share capital or preference share capital. If it is at premium, then bank account debit to equity share capital to securities premium. If it is discount, bank account debit, discount on issue of share account debit to equity share capital or preference share capital. Now, this is the second journal after due to the preference shareholder. Next is you have to make a provision of premium to be paid at the time of redemption, that is premium on redemption. Now, in the earlier journal you learned to know that preference share capital account debit, redemption on premium on redemption account debit to preference shareholder account. So, at that time you debited premium on redemption. Now, you will credit premium on redemption and it will be adjusted against the existing premium on or free reserve balance. Now, existing premium means securities premium, there might be balance in securities premium reserve. So, you can adjust securities premium reserve account, or if the balance doesn't permit, then you can go for statement of profit and loss and general reserve. Now, let me give you one example. Suppose total amount to be paid for the purpose of premium on redemption is 10,000. Suppose you have 2,000 rupees in securities premium and 6,000 rupees in PL and 10,000 rupees in general reserve. First, you will adjust premium on redemption against securities premium. So, you have to make a payment of 10,000 as premium. So, 2,000 will be adjusted against securities premium, 6,000 against profit and loss and rest from the general reserve. And if you have entire amount in securities premium balance, then you can just simple adjust with the securities premium. Okay. So, here oblique denotes that if balance doesn't permit in share premium, then you will go for statement of profit and loss. If again there is a shortfall, then you will go for general reserve. Okay. And the next one, that you have to you have to prepare CRR account, capital redemption reserve account, out of your free reserve balance. What does it actually mean by free reserve? Statement of profit and loss and general reserve. Okay. So, and if any reserve is available for distribution of dividend, that will also be known as free reserve. So, the journal will be statement of profit and loss account debit or general reserve account debit or both to capital redemption reserve account, to CRR account. Okay. Next, the entry can be if for the purpose of liquidity you want to sell any asset, then the journal will be bank account debit to asset account if it is sold at par, that is the value of asset is equivalent to sale proceeds, then the journal will be bank account debit to asset account. If it is sold at a loss, then bank account debit, suppose the value of asset is 30,000 and you are making sale at 25,000. So, amount received by you is 25,000, so bank account debit 25,000, profit and loss account debit 5,000 and to asset account 30,000. and you are selling such asset at a profit, then the journal will be bank account debit. Say for example, you are selling 30,000 valued asset at 35,000. So, bank account debit 35,000 to asset account 30,000 to profit and loss account, that is profit on sale 5,000. Okay. And if you think you can raise bank loan, for this purpose the entry will be bank account debit to bank loan account. Sorry, you may issue debenture, in that case the entry will be bank account debit to debenture account. Okay. And finally, you have to make a payment of the preference shareholders. So, what will be the entry? Preference shareholders account debit to bank. As you can remember, the second entry was preference share capital account debit, premium on redemption account debit to preference shareholder account. So, at that time preference shareholder was credited, now you are making payment, that is why preference shareholder account debit to bank account. Okay. Now, additional entries you must remember, as I already told you that CRR, capital redemption reserve, is only used for the purpose of giving bonus to the existing equity shareholder, so that it can again convert it into the capital. So, what will be the entry for giving bonus? If bonus share is given at par, then the entry will be capital redemption reserve account debit to bonus to equity shareholder account. Again, bonus to equity shareholder account debit to equity share capital account. And if bonus is given at premium, then the first entry will be same, that is capital redemption reserve account debit, or any other reserve can be utilized for the purpose of giving bonus share. So, capital redemption reserve account debit to bonus to equity shareholder account, and if bonus is given at premium, then bonus to equity shareholder account debit to equity share capital account to securities premium account. So, this is the entry of fresh issue after carrying out redemption as bonus share. For this bonus issue, CRR account can be utilized. Okay. So, that is all about the accounting entries. Now, in the learning objective, I told you that we will learn one sum, okay, that how actually redemption of preference share will be made. For this purpose, I have prepared one sum for you, and you just see that it is a balance sheet of X Limited Company as on 31st March 2022. Okay. Now, as on that date, it has share capital of rupees 1,40,000, and the detail of share capital is denoted in note number 1. There is a balance of reserve and surplus account, some reserve and surpluses are there, and the balance is mentioned, or specific balances are mentioned in note number 2. Total balance is 55,000. Current liabilities are there, like it might be sundry creditor, that is trade payables or other things. So, current liabilities is 30,000. Okay. Along with that, so total of liabilities 2,25,000. Along with that, it has fixed asset, tangible fixed asset, which is also mentioned in the details is mentioned in note number 3. Tangible fixed asset is 1,32,000. Then it has other current assets like investment. It has investment of rupees 28,000. It is definitely current investment. Inventories is also 30,000. Trade receivables 15,000. Cash and cash equivalent is 20,000. Okay. Now, this is the main balance sheet, and this is notes to accounts. What is the notes to accounts? That details of share capital, 500 redeemable preference share of rupees 100 each fully paid up, 50,000. Okay. So, this is the notes to accounts, that the breakup of share capital, reserve and surplus, and tangible fixed asset. Now, it has 500 redeemable preference share of rupees 100 each fully paid up. The value is 50,000. The interesting part, that I have already told you, unless and until it is fully paid up, it cannot be redeemed. So, the first provision has been complied with, that redemption can be done for this preference share as it is fully paid up. It has 9,000 equity share of rupees 10 each fully paid up. It has a balance in securities premium reserve 10,000, general reserve 20,000, and balance in statement of profit and loss account 25,000. So, these two, that is general reserve and statement of profit and loss, is free reserve balance that can be utilized if CRR account will be created. It has building and plant of rupees 1 lakh and 32,000 respectively. Now, the additional information I am citing this one, that the company decided to redeem its preference shares at a premium of 5% on 21st April 2022. The balance sheet is as on 31st March 2022, and just after few days the company wants to redeem preference shares at a premium of 5%. For the purpose of redemption, now you will just see 50,000 is the face value of preference shares to be redeemed. For the purpose of redemption, a fresh issue of 1000 equity shares of rupees 10 each was made at rupees 12 per share. So, 1000 equity share will be issued at rupees 10 each. The face value of equity shares to be issued is rupees 10. So, 10,000 can be collected by issue of equity share. Now, what will be for the rest? 50,000 you have to make a payment for redemption, 10,000 you just collect it from the equity shareholder. So, this 40,000 can be collected or can be raised from the free reserve balance. I think it is clear to you all. And at the time of issue of share, the company is issuing it at a premium of rupees 2, because share of rupees 10 will be issued at 12 per share. So, 2 rupees is your premium, and it is payable on full, payable full on 2nd April 2022. Okay. These shares were fully subscribed and all money were duly collected. All the investment were sold at rupees 27,000. We have investment of 28,000 in the earlier slide I have already mentioned. So, it will be sold at 27,000 on 23rd of April. And finally, preference shareholders were paid off on 25th April 2022. Okay. So, preference shares will be due for redemption on 21st April and it will be paid on 25th April. The directors wish that a minimum reduction, it is most important thing, the directors wish that a minimum reduction should be made on the revenue reserve. Revenue reserve means general reserve. Minimum reduction will be made for in general reserve. So, if we have to create, definitely we have to create CRR account. First of all, we will utilize profit and loss, then we will utilize general reserve as this point is mentioned over there. Pass necessary journal entries and draw the balance sheet after the redemption. Now, this is my suggestion, you just draw the sum in your copy and that will be very easy for you to understand later on. Okay. You just copy it in entire sum in your paper and in your copy, and after that you just carry on the solution. Now, this is the solution. First, it is according to the dates. First, on 2nd April the company issued equity share, and for that the journal is bank account debit to equity share capital account to securities premium account. So, bank account will be 12,000 because 1,000 shares will be issued at 12 per share. So, 1000 into 12 is 12,000, then equity share capital 1000 into 10, 10,000, and the balance is 2 per share on 1000 rupees as premium. So, 2 securities premium reserve account 1000 into 2, 2000. Narration is very simple, that being 1000 equity share of rupees 10 each issued at a premium of rupees 2 per share as per the board's resolution number ... dated ... Next, on 21st April, preference shareholders will be due for redemption. Preference shares will be due for redemption and the redemption will be carried at 5% premium. So, redeemable preference share capital account debit 50,000, 500 share of rupees 100 each, 50,000. Premium on redemption account debit 5% of 50,000, that is 2,500, to preference shareholder account 52,500. So, preference shareholders are due for redemption. Narration is being 500 redeemable preference shares of rupees 100 each is due for redemption at a premium of 5%. as per board's resolution number dated. Now on 23rd April, the company, X Limited company, sold all of its investment at 27,000. The value of investment was 28,000 and it is sold at 27,000. So 1,000 is loss. So the journal entry will be bank account debit 27,000, statement of profit and loss account debit, that is loss on sale 1,000, and to investment account 28,000. Being investment sold off at a loss of rupees 1,000. Now we will move on to the next journal, that is on 24th April. We have to make arrangement for redemption of preference share, and for this purpose, as you already can see in the last slide, that the company needs to redeem preference shares, which is the face value of 50,000, and out of which only 10,000 has been collected by issue of equity share, right. So the rest amount need to be created as CRR, that is CRR account will be created for the rest amount. Now how to calculate it? For this we have to do that particular workings, that workings should be amount to be transferred to CRR account, that is capital redemption reserve account. Now the format is the face value of preference shares to be redeemed 50,000, out of which you just deduct the face value of equity shares issued at premium. Remember, if shares are issued at par or at premium, then face value of share will be mentioned over there. Face value of preference shares issued was 10,000. So only face value will be mentioned or used for the purpose of calculation of CRR if shares are issued at par or at premium. But if shares are issued at discount, then we should deduct not the face value, we should deduct only the proceeds which is collected from the issue of share. Okay. So face value of equity shares issued at premium, that face value will be deducted from the face value of preference shares to be redeemed. So the balance is 40,000. So you have to make an adjustment for 40,000, that means you have to create CRR account for 40,000 rupees. Okay. And for this, as per the rules of the company, minimum use to be made in general reserve, it was mentioned in the problem. So that is why we are making journal of that. We have 25,000 balance in statement of profit and loss. Out of 25,000, 1,000 loss has been adjusted for the purpose of selling out investment. So balance as per the profit and loss account is 24,000. We had 25,000, out of that 1,000 loss has been adjusted. So balance is 24,000 only in statement of profit and loss. So statement of profit and loss 24,000, rest amount out of 40,000 will be utilized from general reserve, that is general reserve account debit 16,000 and to capital redemption reserve account 40,000. So being capital redemption reserve account has been created out of free reserve for the purpose of redemption of preference share. This will be the narration. Next you have to make adjustment for the premium on redemption. At the time of making entry for due to the preference shareholder, we made that preference share capital account debit, premium on redemption account debit to preference shareholder account. So preference shareholder premium on redemption account was debited at that time. For this, the journal will be securities premium reserve account debit to premium on redemption account. I think it is clear to you all that first of all, for securities premium will be used for the purpose of making adjustment of premium on redemption. If balance does not permit in securities premium reserve, then we will go for profit and loss, then general reserve. Now as there is ample balance in securities premium reserve, we must utilize securities premium reserve account for the purpose of making adjustment of premium on redemption. And the last entry is preference shareholder account debit to bank account. So you are making payment to the preference shareholders. So for this, the narration is being preference shareholders are paid up. So this is all about the journal entries for the purpose of redemption. Now we are making the balance sheet, fresh balance sheet after redemption of preference share, that is after 24th of April this balance sheet is being prepared. There is a mistake of date, it will be after 24th of April, that is after making the redemption, this balance sheet is being prepared. Now in the balance sheet the share capital is 1 lakh, it is mentioned in note number 1. You just remember preference shares are redeemed existing in the as per the balance sheet of 31st March. The company has had 900 equity shares, 9,000 equity shares, and during the year or during this particular period for the purpose of redemption company issued 1,000 equity share. So total 9,000 plus 1,000 equity share of rupees 10 each, it is share capital, that only equity share is over there, 10,000 equity share of rupees 1 lakh, it is mentioned in note number 1. Then there is a balance of reserve and surplus, it is mentioned in note number 2. We have created that one. I'll let you know about the note number. There is no change in current liabilities. Non-current asset, there is also no change in non-current asset, that is tangible non-current asset. Investment, there is no investment during this particular period. You sold out all the investment for the purpose of liquidity, not for the purpose of regulatory provisions of redemption of preference share. It is only for the purpose of liquidity. Investments are being sold, so there is no investment, nil, and rest inventory receivables are same. Bank balance, it is denoted in note number 4. So we will just see the note numbers. The first note, existing 9,000 equity shares were there, along with that 1,000 equity share has been issued. So total 10,000 equity shares of rupees 10 each fully paid up, 1 lakh. Next we will let you know that reserve and surplus balance. In securities premium there was existing balance of 10,000 rupees, new shares were issued at premium 2,000, and out of that you are making payment of premium on redemption, how much? 2,500. So 2,500 will be deducted from the securities premium balance. So 10,000 plus 2,000, that is 12,000, minus 2,500, that is 9,500 is the balance available in your securities premium. Next, general reserve, total 20,000 was there, out of which you made a provision for 16,000 for the purpose of CRR, making CRR. So 20 out of 20,000, 60,000 will be deducted, 4,000 is the balance in your general reserve. Then statement of profit and loss, you had 25,000 balance in statement of profit and loss, out of which 1,000 was adjusted for the loss on sale of investment, and remaining 24,000 was used for the purpose of making transfer to CRR account. That is why 25 minus 1 minus 24, that is nil, balance of profit and loss is nil. And last, it is the new part in reserve and surplus, that is capital redemption reserve account. You have created 40,000 value as for the purpose of redemption of preference share in CRR account. So that is also in reserve and surplus. Next, there is no change in fixed asset note, tangible fixed asset. There is a change in cash and bank balance. The opening cash and bank balance was 20,000. After that you issue shares at premium, that will be added with the opening balance, that is 12,000. You sold out your investment at 27,000, so that will again add out with the opening balance, total balance 59,000. Out of 59,000 you made a payment to the preference shareholder valued rupees 52,500. So out of 59,000, 52,500 has been deducted, 6,500 is the closing cash and bank balance. So these balances will be reflected in balance sheet, that is 1 lakh capital, share capital, 53,500 as reserve and surplus, and 6,500 is your bank balance. Just see in the balance sheet, it is as per the notes to accounts. Okay. So this is all about today's class. Just in 1 minute I will give you the synopsis, that first you have to make a journal entries. Before that you need to know the regulatory provision. I am giving you one by one. First, all the preference shares must be fully paid up, unless and until it is fully paid up it cannot be redeemed. This is the first provision. Second is, for the purpose of redemption you just issue fresh equity or preference share, or you can utilize your free reserve balance, or you can combine these two, some portion out of free reserve and some portion out of fresh issue. You have to make an adjustment for premium on redemption. Then if for the liquidity purpose you may issue debenture, you may raise bank loan, you may sell off your assets, and last is making payment to the preference shareholders. I am giving you in 1 minute about the journal entries. The first journal is due to the preference shareholder, that is preference share capital account debit, premium on redemption account debit to preference shareholder account. I am repeating once again, for due preference share capital account debit, premium on redemption account debit to preference shareholder account. Then if you issue shares, bank account debit to equity or preference share capital. If it is at premium, then bank account debit to equity share capital to premium securities premium account. Then for making CRR, the entry will be statement of profit and loss account debit, general reserve account debit to CRR account. Then for premium on redemption, that is securities premium reserve account debit, statement of profit and loss account debit, general reserve account debit to premium on redemption account, and lastly for making payment preference shareholder account debit to bank account. So you must remember these 5 things, 5 journal for this chapter. Basically along with that there might be some additional journal, but these 5 things must be in your mind for doing the preference share redemption of preference share sum. It will be very easy for your part, and that is all from my part. If you are having any doubt, you can just come to the teachers room and meet me, or you can ask me in the class, or you can mail me in my mail ID, that is soumyaganguly2008@yahoo.com. So thank you so much. Thank you for the class.